Welcome to IPO Adda. We are joined by Sandeep Sikka of Reliance Nippon Life Asset Management Company. Sandeep, thank you so much for joining in. The first question, we have seen a very strong demand from the institutional side as far as your anchor book is concerned. If you could take us through the names and, what about the unmet demand? Do you think a lot of this will flow into the QIP book and we could see some good subscriptions coming in on that front?
Thanks for having me. Yeah, we are very happy and proud of, I think, the kind of demand that we have got. I think today we have some of the best global names, whether it's to do with the Fidelity, Morgan Stanley, Pictet, Columbia Threadneedle, Ardia, Kuwait Investment Authority, and also on the domestic side, we have HDFC Mutual Fund, Birla Mutual Fund, SBI Mutual Fund, DSP Mutual Fund, various other, and amongst the insurance companies also, we have ICICI Pru, a life insurance company, Bajaj Alliance. So we are happy with the kind of anchor book we have got. I think this is again a reflection of the India growth story and also the fact that I think we are happy and proud of the franchise that we have built over the years. I think this is over the last few years we've been seeing a lot of fundamental changes happening in India, and especially with a lot of initiatives being taken by the government and Prime Minister Modi, whether it was Jan Dhan, whether demonetization. We have seen a lot of flow of this money coming into the banking system and coming into the financial assets through mutual funds. So I think, yes, I think we're very excited with what's been happening, and I think we expect to answer your question. While I will not be able to exactly comment whether these same institutional investors will come in the QIB also, but clearly the response has been good, and I hope to see these investors and many more investors as shareholders post the IPO.
Okay.
On your business side, your competitors like ICICI and HDFC have a greater reach because of their presence in banking sector. So how do you plan to compete with them, and how do you plan to increase your reach when it comes to mutual fund business?
I think at this point, from a reach point of view, and a stand-on reach, we have the highest and the biggest branch network. Amongst the top 3 players, we are the only one which is not sponsored by a bank. And from our perspective, the way we see, I think we have best of both the worlds. On one side, we have 58,000 IFAs will work with us, and today, they serve 70 lakh investors across 1,000 cities and towns. On the other side, we have also the support of almost all the banks, whether it's private sector banks, public sector banks, and even the foreign banks who sell our products. We also, like I mentioned earlier, we have the largest branch network. This 171 branch network will be moving to 500 branches over the period of 3 years. And clearly, I think our focus and strategy is to be present in almost all the districts of India, because I think we are seeing clearly post demonetization, there's a lot of growth coming from small cities and towns. So I think from our perspective, the way we see is, while we don't see it as a disadvantage, we rather see it as an advantage, because our own branch network is there in small cities and towns, and we enjoy the support of all the IFAs and all these banks that you talked about, HDFC, ICICI, they're also selling our products in the small cities and towns.
Okay. Sandeep, post demonetization, we saw significant shift coming in to giving money to organized players. So, not only bank benefited, but a lot of asset management companies also benefited. So, moving forward, how do you see the mix of the assets under management changing? I mean to say that, how do you see the mix changing between equity allocation that investors make versus a debt fund versus a balance fund? Do you see the share of debt funds and balance funds moving up as a percentage of overall pie that you manage currently moving forward?
Yeah, I think you're right. See, one thing that has happened over the years, I think from our perspective, we have, even before the demonetization, we opened these 170 branches. I think we have always been very bullish that the India growth story is going to be bottom up. A lot of wealth is going to be created from the small cities and towns, and demonetization acted like a catalyst. And demonetization, because of which money came into the banking system. While I think the markets are at all-time high, the AUM is at all-time high, the AMC industry, the mutual fund industry, the assets have doubled 3 times in the last 5 years. But the fact of the matter is only 3% of the population is investing in mutual funds at this point of time. So we see 2 big changes happening going forward. I think as the interest rates come down, and also with the government's push to move away from physical assets to financial assets, we will clearly see more money coming into the organized sector, and that money will flow into the asset management industry. Till now, if you were to see, majority of the money that used to come into the mutual fund industry used to be equity, but the trend has been changing. But going forward, we also see a lot more money which was in bank deposits. That money will move into the asset management industry. So we would like to see ourselves in a position, ourselves an asset management company which is very balanced. At this point of time, 58% of our revenue comes from equity and 42% comes from fixed income and others. I think we like to see ourselves as a balanced asset management company. The potential of debt is also really, both equity and debt is huge, but the fact that 2% of the household savings come into capital markets, I would assume that the growth in going forward in debt will be much more in volumes. But from a revenue perspective, we would like to build up an asset management company wherein it is agnostic of all the cyclicals, all the market cyclicality, so that it's irrespective of market movements. I think we keep focusing on very stable, profitable growth going forward.
Okay, good to know that, Sandeep.
But I think with the interest rates coming down, I'm very confident.
Yeah, please continue.
With the interest rates coming down, but I clearly see more money moving out of the bank deposits into the debt mutual funds.
Okay, Sandeep, if you talk about the financial aspect of it, if you could give me a breakup as to what kind of a margin do you get as far as the equity AUM is concerned versus the debt AUM. So moving forward, if the mix really changes, will it impact the overall margin? Because what I understand that probably you make more money on the equity management side. So if you could just take us through the financials as to how really the matrix moves for a company like you.
So broadly, if you were to look at equity assets, I'm just giving a broad numbers. The overall gross realization is 220 basis point in equity. In debt funds, it is 150 basis point. And also, I think within the debt funds, there are while the overall limit is 150, the money market funds typically charge 5-10 basis point. For us, the focus over the last many years has been profitable growth. So for us, we've been focusing on three things. A has been equity, B gold and commodity funds, and C on the debt also basically on the long duration funds. So at this point of time, if you were to see average, the net realization to us in equity comes to about 130 basis point. On gold and commodities, it comes to about 90 basis point, and blended for long-term debt comes to about 50 basis point. So I think the blended yield for the company has been today in the range of about 63 to 65 basis point. Going forward, I think we clearly see it will be basically at the same levels of between 60 to 63 basis point. What is more important is, I think what we should not be worried about with the change in product asset mix, there can be a little 1 or 2 basis point drop in the blended realization, but the volumes will go up. To give you a perspective, in 2014, the average revenue, while the blended yield was about 75 basis point, the average revenue, the revenue of the company was about 750 crores. 2017, the blended yield was 63 basis point, but the revenue of the company was about 1450 crores. So I think this, even if the change in mix, the blended yield come down by a couple of basis point, it will be increased by, it will increase many times with the change by the increase in the volumes.
You will be keeping aside around 165 crore for inorganic growth. By when do you plan to utilize this fund? Can you give us some timelines on the same, sir?
No, the way we see, I think clearly if you were to look at the Indian asset management industry, at this point of time also there's already a lot of consolidation. The top 10 players have about 80% market share. The top 5 have about 55-60% market share. Even if you look at the profitability, the top 3 or 5 asset management companies have the lion's market share. We clearly see there is going to be there's going to be scope for consolidation in the industry. Last year we acquired Goldman Sachs India operations, which gave us a edge in ETF. Today we are one of the largest players in ETF. So we clearly believe that there can be further opportunities in acquisitions, while at this point of time, because of the, we cannot mention anything which is beyond the RHP. However, I think, like I said, there will be consolidation, and we will look at acquiring if there are any opportunities which come, which add to the profitability or complement our existing business model. While you mentioned about 160 has been kept aside for the acquisitions, also the company has a net worth of about 1600 crores that is also available. So from our point of view, we clearly see if there's any acquisition opportunity available, we will be exploring that.
So you will be using some of the proceeds to invest in your AIF business. Can you explain how does this business work, and what is this kind of investment, what this investment will be in the business actually?
So the way we see if you were to look at as a complete asset management company, we have different verticals. First, we have mutual funds, domestic mutual funds. Then we have ETFs, offshore funds, pension money, AIFs. We believe AIFs will also become big. On one side, on one spectrum, we have retail, which is mutual fund, which is purely for retail investors. On the other side, we have alternate investment funds, which are for HNIs and more savvy investors. We see that market also becoming big in times to come. At this point of time, we manage nearly a little more than 2,000 crores in AIF. We see this opportunity. The amount that has been mentioned there is basically more to invest in the AIF business and to invest in a seed capital, because we believe there is a scope and there is an opportunity to launch a couple of more new AIF strategies. And while I think at this point of time I will not be able to share what are those strategies, but we clearly see AIF also becoming big for us in times to come.
Thank you so much, Sandeep, for taking out the time and speaking to Bloomberg Quint. All the best when it comes to IPO. So with that, we call it a wrap on IPO Adda.